Hey everyone, today I'm going to do something different and share a trade recap video where I made $700 selling put options on some of my favorite stocks. Inside the video, I'll share with you my exact thought process, the stocks I picked, and my reasoning for selecting the exact options contracts to sell put options. Let's go. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. So before we get started, let's understand what's a cash secured put and how does the strategy work. A cash secured put is an option strategy where you sell put options on a stock at a set price, also known as the strike price, for a set time. In return, you receive a premium for taking on this obligation. It's also known a cash secured put because you need to have enough cash to cover the cost of buying the stock if assigned. Now, let's see what makes this strategy attractive. First of all, you will make money as long as the price of the stock stays above the sold strike price at expiration. As an option seller, you also benefit from theta decay, also known as time decay, as the value of the options contracts keeps decreasing every day. In case the stock price drops below the sold strike price at expiration and the put is exercised, you get to buy your favorite stock at a discount. Not bad. Your risk is limited to the cash you have to put aside to buy the stock at your sold strike price in case the put option is exercised, making this a safer strategy compared to some of the other option strategies that are out there. Next, let's check out my stock selection criteria for the stocks that I like to sell put options on. First of all, I like to choose a stock that offers good premiums. Ideally, I like to target a monthly return of 2 to 4%. Second, it goes without saying, I want to choose a stock that has strong fundamentals and growth potential ahead. Obviously, because there's a risk of assignment with this strategy, I want to be comfortable owning the stock, so I want to sell put options on a stock that I like and I'm comfortable owning in the long run. Last but not least, don't run this strategy on meme stocks just because they offer high premiums, because if you are assigned, you could be bag holding for a while. So the first stock I chose to sell put options on was none other than HIMS. And for those who are not aware, Hims and Hers Health is a telehealth platform that connects consumers with healthcare professionals for a range of health concerns, including mental health, sexual health, dermatology, and primary care. They offer online consultations, prescriptions, and a variety of health and wellness products, including prescription and non-prescription options. The company also provides educational programs, wellness content, and other services. So I have the HIMS 3-month chart pulled up on Thinkorswim, and let's check it out. I'm recording this video on May 28th. I took this trade yesterday on May 27th. If we look at this candle right here, this is yesterday's candle. As you can see, it opened close to about $56 and ended the day around $53.52. Now, as you can see that this is towards the middle of the Bollinger Band. And for those of you who are not familiar with the Bollinger Bands, the Bollinger Bands are a technical analysis tool. It's a range of bands that the stock tends to stay in 95% of the times. So as you can see, HIMS is currently trading towards the middle of the Bollinger Band. So at the time that I sold the put option, my thought process was that since it's trading close to the middle of the Bollinger, we could potentially see a bounce back up. Or if it does break the middle Bollinger Band, I would look for an area of support underneath. Now looking at some support levels, I see some support here at the 51 level, and I see the next support here at close to the $48 level. And the next big visible support is more towards this 50-day moving average, this blue line right here, which is more towards a $40 strike price. So let's look at the options chain and see which options contract I went with. I have the options chain pulled up right now. And if you look at this red triangle right here next to the 48 strike price, this is the options contract that I went with yesterday. So currently HIM's trading at 51.92. Yesterday, when I sold this $48 strike price put options, HIMS was trading close to the $53 level. And this delta, which is now 18, was more like 13 yesterday because obviously the stock was trading close to $53. Now, as you can see, this options contract has a lot of open interest and volume, which is one of the reasons I selected this options contract. Secondly, with the stock trading at around $53 and this being a short week, I assumed that if the stock does fall down to $48, that I'm happy taking assignment at that level. So obviously HIMS has come down a little bit since my sold strike price yesterday, and this options contract is currently trading around 45 cents. At the time that I sold my put options, it was trading for around 40 cents per options contract, and I sold 4 options contract collecting a premium of $160 for this Friday, May 30th. My next selection for selling put options was Robinhood. I have the Robinhood 3-month chart pulled up here on Thinkorswim, and this is yesterday's candle. Again, I took the trade yesterday. Today's May 28th. I took the trade on May 27th. I sold the put options when Robinhood was trading more towards the 65.50 price level. And as you can see right now, it's a bit lower than that at the 65.21 level. So looking at some support levels, there's some support right here at the 62.50 level. And the next level of support I see is at the $60 level. And the next level of support I see here is at the $58 level, which is actually the middle of the Bollinger Band. So let's go over to the options chain and see which options contract I chose to sell put options on. So I'm going to go to trade options, pull the May 30th options chain. And as you can see right here, we have this red triangle right here next to the 61 strike price options contract. And it has a decent open interest and volume. Right now, it's a delta of 14. Yesterday, I believe it was close to a delta of 13 when I sold this put option. Looking at the current value of the options contract, the bid price is 30, but at the time that I sold the put option, obviously Robinhood was slightly higher than the current price, and I received 35 cents per options contract, and I sold 5 of them collecting $175. If Robinhood gets down to $61 by this Friday, then I'm okay picking up Robinhood at $61. If the market sells off and drops lower than $61 and Robinhood goes down to $60 or even $59, at that point on Friday, I have the option to either pick up the stock at 61, which is my sold strike price, or I can roll it down and out a couple of weeks to pick it up at a lower price. The next stock that I sold put options was Nvidia. And Nvidia actually has earnings after hours today, May 28th. Considering that Nvidia has earnings, I wanted to be really careful because obviously, even if the earnings come out positive, nobody knows if the stock's going to go up or go down. And keeping that in mind, I wanted to be careful and sell put options at a price that I'd be comfortable picking up Nvidia in case it falls down. At the same time, I wanted to take advantage of the increase in the implied volatility due to earnings and sell some put options to collect juicy premiums on Nvidia. So looking at the 3-month chart right here, this was yesterday's candle. And as you can see that there wasn't much range yesterday. It went all the way up to 135.57, I believe. And then the lowest point was close to 133. I sold my puts around 2 o'clock in the afternoon yesterday, and I believe at that time Nvidia was trading around 135.25. Right now Nvidia is at 135.72, so obviously it's slightly higher, and that would mean that the value of my put options since yesterday would have decreased to my benefit. If we look at Nvidia's chart and the support levels, I see a strong support here at the 126 level, which is also Nvidia's 200-day moving average. And we also have additional support here at the 122 level, which is a 100-day moving average. Now, I'm not saying Nvidia is going to drop, but if it did drop, I want to choose a price that I'd be comfortable picking up Nvidia. So looking at the options chain, I chose the 120 strike price. As you can see, looking at the open interest and volume, we have a tremendous amount of open interest and volume at this level. So yesterday when I sold the put options, this options contract was more like a delta of 11, but really I wasn't looking at the delta. I wanted to pick up Nvidia at a price that I'd be comfortable owning it, and I wanted to take advantage of the juicy premiums with the increase in the implied volatility due to earnings. I went with the 120 strike price, and at the time I got a premium of 53 cents per options contract or $53 per options contract, and I sold 5 options contracts collecting a total of $265 for this trade. My last pick was Palantir Technologies, and it's a great AI stock that I believe in the long term. So looking at the 3-month chart right here, this was yesterday's candle. Again, I sold put options on Palantir yesterday, May 27th. Today is May 28th. And looking at this red candle right here, it opened around 126 and it ended the day around 123. I sold my put options when Palantir was trading more towards the lower end of this price, towards the 123 range. So let's look at the chart. It's trading more towards the middle of the Bollinger Band. And the next obvious level of support I see right here is the bottom of the Bollinger Band at a strike price of 111. Now, knowing that Palantir can be volatile and we can see some big price swings any particular day, I wanted to keep that in mind and choose a strike price that I'd be comfortable owning Palantir if assigned. So keeping that in mind, let's go over to the options chain and see which options contract and strike price I selected. So we're going to go to trade and pull up the options chain. And as you can see, I have the 113 contract selected right here with this red triangle. This is the options contract I went with. Now, again, I was extra cautious given the market and knowing that one tweet can change the whole dynamics of the game on any given day. I went with the 113 strike price. And obviously, Palantir's risen since yesterday. It's right now trading at 124.60. So while it shows to be a delta of 4, it was close to a delta of 10 yesterday when I sold this put option. So right now it's just trading at 12 cents per options contract. But at the time, I got 45 cents per options contract, and I sold 2 put options and collected a premium of $90 for this trade. So here's a summary of the trades. And as you can see, I collected a total of about $690 selling put options on these 4 stocks. All right, that's a wrap for this video. If you enjoyed it and learned anything useful, please give it a thumbs up and subscribe to my channel. Also, if you'd like to see more trade recap videos like this, let me know in the comment section below. I'll see you in the next one.